Welcome to Trading Lounge and the US indices for Monday, June 27. I'll just try to keep this as simple as possible. This is 100 ticks, it's the S&P. This is the low here at this point, and we've been looking at the move up here. So in very simple terms, we can look at it as being bullish or bearish. Now, in the bearish count, we'll look at it simply as 1, 2, 3, 4, 5 for the A wave, and A, B, and C here for the B wave, and then going up for the C wave here. And going up for the C wave here, we've got 1, 2, 1, 2, 3, 4, 5 for the third wave. And that should, once that's completed, see a fourth wave. So we should see a little dance across the 3-9 area here, and then another push to the upside, probably to around the 39.50. Markets love big numbers, the 4,000. The market may just push up there. My normal story is that if Friday closes strong, well then Monday will follow through, and then we'll start to see profit taking on Tuesday morning, and then anything left in the trend will resume on Tuesday afternoon. Then Wednesday and Thursday, they will be the swing days, and then Friday and Monday will either be bullish or bearish, and that's where we'll get our next trade from. So this current trade we've got in here at 3.9, then you can look to move out. You probably already moved out of it on the Friday. However, if you're pushing it further, anywhere between 39.30 and 39.50 would be a nice sort of safe place there. And of course, it could pull up to the 4,000. If we're looking for the bearish count, we would be looking for the A wave, the B wave, and the C wave here. And that particular ABC, we can look at that in a couple of different ways. We can look at it as wave C of 2 over here, and that would be wave 1 down here, and we can have a look at that in the bigger picture a bit later. There's other ways to label this here in terms of a corrective pattern, and if that's the case, then we would need to be looking at a move to the downside. Now, we've got two counts to the downside. One will come down very fast, and the other one will come down a bit slower, like a fifth wave, so to speak. So we need to basically, verify this situation here to see if this wave 5C of 2 or 4 or even B comes into place here. Now, on the bullish side of things, this wave C here, if we were looking at the bullish side of the market, we would need to look at this as wave 1 and 2, and then up for 3 and back for 4, and then up for 5 to make 5 waves up. If we get 5 waves up, well then if we get 5 waves in the opposite direction of the trend, because the trend has been going down, if we get 5 waves in the opposite direction here, then we're going to get an ABC pattern, and then we're going to go further up. And I'm thinking that obviously everything always takes longer than we think that it does, but if Monday and Tuesday give us this, then I think Wednesday and Thursday could give us this ABC across here for a bullish pattern or a short trade setup. The swings, because the swings normally come in on the Wednesday and the Thursday at that point. So I would be bullish if I can see 5 waves to the upside, and a classic trading levels pattern across the 4,000 there. So I need to see something like this here, the arrival, the reaction, the first high above the level, and so on. So we would need that to go long. So I want to be open-minded about being long and being short, and I want to sort of stay with the evidence, because my approach is that I can see 2 bearish counts, and I can also see the bullish count within all this as well. So just before I leave this page here, we were long here, and we want to be getting out anywhere between 3,900 and 3,930. You could probably stretch it to 50 in this fifth wave here, but somewhere up in here, look to move out of the market and then don't push any buttons for a little while. I know it's always tempting after you've made a bit of a profit, but as you know, you always, not always, but a lot of the time end up giving it back, making it in the trend and giving it back in the correction. So we're going to see, you know, if we get a long trade set up across this this level here. That's pretty much it, really. We're just trying to keep it as simple as possible. Let's see if we get 5 waves up or 3 waves up. That's always been the thing. So if I know we're on the 2K tick before, but let's just go for a little bit of a walk first. So on the bullish side of things, this would be a count that would need to be viewed as well. So an A wave, an ABC for the B wave, 1 and 2, 1, 2, 3, 4, 5 here for the third wave, the fourth wave, and the fifth wave here. So as I mentioned, if we do get 5 waves up here, then we'll look for the pullback at that point, and then look for the trade setup, and then go long from that point there. Okay, so we need that impulse wave there. We need a classic trading levels pattern sitting on this particular level here as well for that. And the other thing that we need to understand as well is that wave 4s get a bit complicated. So who's to say and what's to say that that's over at that point? You know, is it possible to, you know, just shoot in the breeze here? Look, because I think we just use Mondays to chat about this a little bit. So wave 4s can get complicated. So we could put wave 4 over here, and put wave A here, and put a wave C over here, and put a wave B over here. So back up into the 61.8%, which is probably around here somewhere. So in fact, this particular pattern here would really suit the European markets, the DAX, and then have a move down. So that's also possible as well. That's what wave 4s do. And, you know, the way that the economy is sitting at the moment with, you know, China, start from the east, China with their, you know, no COVID policy. Then you got, you know, the Mad Hatter up the top there, Putin, you know, and that causes the commodity situation. And then you got the funny feds, you know, printing money. So, you know, it's inflation and so on. So there's a lot going on. So for the market to travel sideways for, you know, quite some time, I think that that's sort of a reasonable sort of ask at this point, you know. So I think we just need to be aware of that. If I just go to the monthly chart here, I just want to try to keep things as simple as possible in terms of what I was thinking anyway with the banks and so on, is to have another move down here. And this would suit, having one more move down here would suit some of the Asian markets as well, especially where I'm from in Australia. We should have 2 more little lows to come in to finish us off. And we can't have those lows really unless the US is going to have those lows. So that's another sort of reason there. This count looks at this as 1 and 2 here, and then 1 and 2 here, and then moving up there, which would suit the banks actually. So banks are not, you know, I mean, we've had our, you know, GFC and the, you know, the problems there, but normally when you have a recession, it's the banks, you know, that lift us out of it with the interest rates and so on. So we can have a look at, and also too, the other reason that is going to bring this chart across. I don't have to pay too much attention to this particular count here, but I was considering, just push this in here. I was considering like a larger wave 4 to be in play as well. I know that, you know, ElliottWave.com have got wave 5 up here, but the only way that wave 5 can go in there is if they have this move down here as a wave 4. So I think that they've gone from wave 1 and 2 to putting this as a wave 4 here. So, but I can't see that, you know, 1930 29 crash, 34 crash being a wave 4 because it was simple and sharp. And then beyond that, there's not much to, you know, and count 5 waves up here, but there's not much data between, you know, before the 1870s, you know, the South Sea bubble and so on, you know. So you could label this any way you want. So I think that Elliott had it as wave 1 and 2, and then they've changed it to 3 and 4, so they could fit this in here, you know, because they probably looked at the you know, because if this is a 5th wave in here, then we've got that diminishing volume in here, which is expected, you know, an increasing volume into a 3rd wave here, so to speak, you know. But that's not what I wanted to look at here. I have been working on that, by the way. Just it's a bit messy here. I'm just looking at all the possibilities here, but I'll get back to you on that. That's just the Dow Jones. But what I did want to have a look at again is China, because we've mentioned this before, that you know, this is a triangle pattern. It could be finished right here, by the way, but it does make wave D and wave E a little bit small compared to these. But this is the starting pattern, and then this one here is just a reoccurring pattern of this one here. So we could also look at this, not quite the same, but the way that this is 60% smaller and 60% smaller, so it kind of fits a little bit. Anyway, the takeaway here is that whichever way you want to sort of, you know, look at this is, but it's corrective. It's bullish corrective, so we need to be going up here. So, you know, unless China's going to sell a lot of stuff to Russia, then you know, it would be going up with this as well. You know, so I think that the pattern is bullish at that point. You know. Anyway, that's enough for the S&P. So just to recap a little bit, we still need to have a look at the bearish count. So the bullish count is that we can end up with a larger wave 4 in here, so an A wave, a B wave, and a C wave. There is also a possibility of a much larger wave 4 that would bring us over here somewhere. That's possible. Still working on that. Otherwise, this is taken from the bank. And the tech stocks, so 1 and 2 and 1 and 2 going to the upside. Possible to have a low in here already for that. So we need to be mindful of that. So we need to be long above. If the 4,000 becomes the support, then we'll go long from that point. And the bigger bearish count, which we also need to be mindful of, I think that should be enough. So the bearish count, the big bearish count, like the doom and gloom end of world stuff, is possible too. So we've got down for wave 1 and back for wave 2, down for wave 1, back for wave 2. And over here we've got this down for wave 1 here, an A and a B and a C, back for wave 2 in the box. So it's basically retesting supply at the 4,000. And we need to see that in 3 waves. So on the bearish side, we've got two counts. One of them is this bearish count here that is extremely bearish. And then we also have another count that comes down, gives us another low, but it doesn't come down as fast as this one will. So we really need to be mindful about this, because when you break it all down, no matter what the big picture is that if we get 5 waves up here and we get support on the 4,000, we'll be going long from that point. If we only get 3 waves up, well then Wednesday and Thursday will probably be the swing days, as I mentioned, but they will probably create wave 4, 5, and then 1 and 2 in green there, and then we'll be looking on the short side at that point. So we'll be looking over the next, if this is the case, over this week, we'll be looking to build in short positions for a long journey to the downside. So that's going to be pretty exciting, and it'll be pretty swift. So some folks, you know, prefer to be long. Some folks prefer to be short. It's a bit of a tricky thing being good at both of them. You know, it's like being an analyst and a trader. It's hard to be good at both of them. So you need to know your strengths and weaknesses and how you're going to, you know, strengthen those up as we go. But as far as the crow flies. Let's see how this goes. I mean, this move up here moved pretty quickly, didn't it? You know, it's more like a third wave than a wave C, because a wave C is normally lazier. So there's a good case for the bullish side here. But even so, I'd still just be guessing at that point, and I don't want to be guessing. So we need to wait to see if we get 5 waves up or 3 waves up. I've taken this move here off the cash market rather, so 1, 2, 3, 4, 5 here. I know that this has overlapped this, but when you look at the cash market, the SPX, this would be the count. So I've just tried to simplify it without making a drama of it. Let's see over the next sessions if we be getting, you know, we've had our trade up here, we've caught that on all the indices, and let's just wait and see if we get 5 waves up, or we're just going to be left with 3 waves up, and we're going to be working to the downside. And then we'll be looking. I mean, we've talked about having short trades over here, but don't worry, we'll be all over it at this point. But there's going to be a day or two that we're going to have a blind spot, because we won't know how some of these structures are until they're actually formed, and sometimes it's a little bit trickier. So expect a blind spot in here, maybe 1 or 2 of them, and we need patience to allow it to unwind, because if this is wave 1 and 2 here, and we get 3 up here, and we get wave 4 here, well, wave 4s can get a little bit complicated. So we kind of like know that we're going to be having some problems there for a session or so. So just be a little bit mindful of that. So yeah, look, just to repeat, if we get support, if we get 5 waves up here, we'll get a classic trading levels pattern, and we'll be going long on the 4,000. If we only get 3 waves up, well, then we're going to be looking at building short, and it'll be really the Friday and the Monday that we'll be moving into those in a bigger way. But we want to try to get some positions up here on the short side. So we don't want to be shorting down here when it's going to bounce off this low here and come back up. You know, we'll get it over here, don't worry about that, but we need to get a couple of small positions in here and ride this out here. So anyway, that's that. The NASDAQ, once again, nice strong move here. We've got a couple of positions in here. We also need to talk about taking money off the table. Anywhere between 12,200 and 12,200 and 300 would be fine at that point, but you've probably already moved out at the 12,000, which would be the right thing to do. But I do see a little bit more upside here. I have labeled this a little bit differently here, because when I labeled the S&P, I put this over here for that. But in this case here, I can see we've got 1, 2, 3, 4, 5 here. So it makes a nice 1 and 2. That means that this would be 1 and 2 in here, and then 1 and 2 in here. This one's shorter than this one, so I have to label it 1 and 2 and 3 and 4. So I can actually get a couple more moves out of this one up here. So like I said, things are going to be a little bit sort of tricky, but we want that top to play out here. That's what we want. Now, it could be a wave 2 up here. It could be a more bullish count up here. We don't know. We just have to allow it to top and turn, and then we'll pick up the thread and we'll move on from that point. It's the same for the Russell as well. The Russell looks a little bit more corrective. It had this bigger, deeper move down through here, so we've labeled it an A and a B, and 1, 2, 3, 4, 5 here for the C wave of A, and then the B, and then 1 and 2 and 1 and 2 here. So building up here. So we're still going to be moving up a bit high. I've got the B wave here. We can have B wave over here where we've got the S&P and the rest of it. So we'll just track both counts. Once again, we need to, you probably moved out on the Friday, but taking profit anywhere or part profit anywhere in this space here would be fine. Sometimes, you know, when you take the low of the trend line here and put it here, this market will come back and check it at some point. So just be just be a little bit mindful that can occur as well, but we'll probably find support and have another little move to the upside at that point. But we could use that as a classic trading levels pattern to the downside to build in a little bit later on, you know, once that becomes the resistance. And the Dow Jones as well. There's a couple of different ways we can look at the bottom here, but you know, this is really strong move up here. It's not like a C wave really, it's more like a wave 3. but like that's the personality of the structure. But as I mentioned, we can just wait and see. Let's just see if we get a fourth wave and a fifth wave to the upside. Let's just see. And even if we get the 4 and the 5th, it's not like we want to trade those. We're not going to start foaming at the mouth, FOMO, whatever it is, but we're just going to wait patiently, let the market come to us with a nice little ABC pattern over here, and then we'll build in once we've got everything established at that point, because what you see here is not what you get next. We've seen this, and then we get this, so then we'll get this again, we'll get this, but these will be 4s and 5s, so we just flip it over onto its head here. So it'll be this pattern in reverse if you want to inverse that up to here. But yeah, this is where we want to be, back over here, or we'll be looking for the short next move. Well, anyway, that's not going to go there, is it? That's not the one we want. Don't have a 1 there, so and we'll get a chance for this too. If it's going to be bearish, it's going to they just normally come back down to the lows and have a bounce at that point. So that means we've got to get a couple of short positions in here, ride all this out, and then be short over here again. It'll be pretty simple if that's going to be the direction of it. Otherwise, we'll be working to the upside. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.